Welcome back. We've been discussing the monetary policy that was announced by the Reserve Bank, which cut the repo rate by 25 basis, but didn't quite indicate whether there will be more rate cuts, because it said that we will look at every policy afresh with the new macroeconomic indicators, and that this less restrictive policy is for this one. That was a very clear statement the governor made. Speaking to me for the past 15 minutes in this show are Mridul Sagar, former MPC member, B. Prasanna, who heads the global markets at ICICI Bank, and Samiran Chakravarti, the chief economist at Citi India. Gentlemen, thank you for your patience. Prasanna, you said there are a lot of positives. What did you take away?
So I think, Lata, the first thing is the fact that he did speak about the efficiency versus the stability trade-off. And
Yes.
He did at length speak about the cost of regulation and the fact that you can, I mean, he didn't say that, but sometimes over-regulation can also lead to loss of efficiency, which is what is the inbuilt message in it. So I guess that's the first thing that I can think about, because a tightening regulation can also lead to a lower credit growth.
Okay.
And the second is the fact that I think there was a little bit extra emphasis on the flexible part of the inflation targeting. And while I think he did mention that it is more for this policy and it is more used as a justification for the current rate cut, I think reading between the lines or hearing between the lines in this case, I would assume that going forward as well, we have a little bit more bias towards growth than towards inflation in the past. So I think, and also the fact that we are now doing policy on expected inflation, and as long as we are comfortable with the inflation trajectory going towards 4, we don't need current inflation to be at or above lower than 4 for us to cut rates. Maybe all of these would have also happened in the earlier regime as well, because it is just now that the circumstances are becoming a little bit more positive. So I think these were the main positive from my side. And of course, the thing about liquidity that you spoke with and Mridul spoke about, it gives us a lot of confidence that even the fact that they have really been aggressive in their actions in the past means that while they could have done more this time, but I think they will react a little bit faster and more aggressively as and when liquidity needs comes up for the banking system as we go forward. Okay.
All right, yeah, fair enough. That's the comfort as far as a banker and a bond expert is concerned. Samiran, how many rate cuts are you expecting? How would you draw the macroeconomic indicators looking forward?
So obviously there are lots of uncertainties both globally and domestically. So what we can at best do is go on the basis of the forecasts that have been put in place. So if we trust the FY26 GDP growth forecast of 6.7% and the CPI forecast of 4.2%, then on that basis, one can say that another 50 basis point rate cut from here would probably take us to the kind of neutral rate that RBI has been comfortable with in the past on the basis of expected inflation. And if RBI at some point of time reconsiders that neutral rate range of 140 to 190 basis points and brings it lower, as some of the earlier MPC members have suggested, then you could see scope for more rate cuts beyond that 50 basis point also. On the growth side, it looks like even if we meet that 6.7, that's lower than the potential growth that RBI would be considering. So from that perspective, there is no real urgency to stop on rate cuts because of growth overshooting expectations. It will all boil down to what extent we are closer to that 4.2 forecast on CPI for FY26.
Okay. Thanks for that. That's well argued. So at the moment, let's only look in for 50 basis. Let's see how things pan out. Mridul, would you say that for a maiden policy and coming after such a lot of criticism that the Reserve Bank faced for tight liquidity, it's well delivered, not bending too much in terms of dovishness, and yet giving reasonable amount, as, I mean, if a person like Prasanna can be happy, must have delivered something.
No, absolutely. The script of the MPC resolution was very good, very well balanced. Even governor's statement was reasonably well balanced, though couple of things were there which were a bit sort of different from one would have expected.
Such as?
So clearly he's sort of hinting at use of more flexibility, but he's also trying to reinstate the inflation target. I hope that target means it is 4% because that's the law.
Actually, Mridul, he was very clear that he will chase that target. In fact,
yes.
After the press conference, I specifically asked him why did he bring up the flexible inflation targeting as the first paragraph in the statement, and he said to commend the framework, not to use that extra flexibility,
and he
but to indicate support.
On that basis, so I fully recognize that he was having faith in inflation targeting, and he said that. My only downside was the press conference probably hinting a bit too much about regulation relaxations and postponement, which could have waited probably a more in-depth analysis of what are the risks and what needs to be done. Because on the LCR, you have to acknowledge that the world is changing. So it's not just the internet deposits. We'll soon have programmable deposits.
Yeah.
And do we need to tighten the LCR rules for that? If we have to, we have to. But tracing them is fine, but one shouldn't really give up these regulations.
I'll tell you two things on that. The previous RBI regime, that is those who were already with who are proponents of the LCR regime, told me that they would have postponed it. Because of the difficult times we are in, tight liquidity and rupee under pressure. So it would have come anyway. And to be fair, while he said that there is a cost, he also said, I'm sure the Reserve Bank takes into account the cost. So, there was a comeback statement as well. Unfortunately, out of time. Prasanna, I'm giving you only 10 seconds here. But tell me, this saying banks have to lend in the call market. Why are you not lending, egging them to lend? As well, this new derivative instruments, allowing brokers registered with SEBI to come in. Do you think the debt market is now in for a good time because of all this?
So we already had a product called Bond FRA, which was active. Now I think the Bond Forward will become attractive as well for companies like LIC and other insurance companies. So it's a very good development that can lead to more demand for longer term bonds and help these insurance companies to reduce their reinvestment risk. And as far as the first question is concerned, Lata, I think that the governor is basically edging banks to actually look at the arbitrage even on an intraday basis. There have been times when the rates are very high in the morning and low in the second half, and it's quite possible for banks to, lend in the morning and kind of borrow in the evening. And some of the banks, we just don't do these kind of, if you're either a borrower, we just stick to borrowing. If you're lending, we just stick to lending.
He wants you to do both.
So I think it's a great nudge. He wants us to do both, but I would say that that nudge should come actually on the collateralized market as well, not just the uncollateralized, which the governor spoke about. Maybe that was not intended to be only for that market, but we will see as time goes.
But there is going to be a committee which is looking at the timings of all the markets. So maybe that they've promised a committee which will look at the chrome market, the collateralized repo market, their timings, he said, but maybe it will look at other things as well that you are pointing out. All told, actually, it's a many splendored policy, though it looked like a brief statement. Gentlemen, out of time, but I think most of you are giving a thumbs up to the policy. On that note, wrap up on this special show. Let's leave you with the first government reaction we got to the Reserve Bank policy. Finance Secretary Tuhin Kantapande.
I think it's a very positive step, and it is taking the whole thing forward, pro-growth, and I think this is a very good step.
Right. The statement also appears to place growth over inflation. Is this something that the government would be more or less in sync with, given the current scenario?
I think it is not this or that. It's not growth versus inflation debate. I think keeping in view the inflation, as well as the growth imperative, MPC has taken the right call.